Muted.
All right, guys, William here, co-founder of PMA. We're going to get started with our advanced trading session for January 2016, okay? So the things that I wanted to cover today is basically to, in a sense, break down the market completely for you guys, introduce you guys to Alpha 33 and Alpha 007. We're going to cover some useful tools and software to make sure you guys understand that, and we're going to go ahead and do some trading schedules, okay? So I'm going to essentially go over different stages. I think we're going to cover probably the 7 top stages to keep you guys focused for 2016. So this is pretty much what it's all about and what we're going to continuously do month after month and just keep up with those. Let's go ahead and get started. Where's my charting graph? That's my clean one. Okay, let's see what we got here. Got it. So most of you guys are already familiar with Alpha 1, which is great. But the first thing I want to get you guys into for 2016, once again, a list of 1 through 7, so you guys may want to write it down, is number 1, market cycles. Okay? So you guys have to understand market cycles. And top 3 cycles that I may pay attention to when I'm personally trading is trending, meaning there's an uptrend, downtrend, trapping, or pretty much consolidation. Now, you guys got to keep in mind when there's a trend, there's also pullbacks, okay? Now, some honorable mentions I would probably say are gaps, divergence, patterns such as double tops, double bottoms, falling wedge, Japanese candlesticks, and Renko candles. Number 2, what you guys need to be able to master is major market levels. So most of you already know support and resistance, pivot points, Fibonacci. Other great things to consider later on is market geometry, harmonic patterns, the pitchfork theory, Gann theory, Elliott wave, and of course my very own market keys. Third thing you guys need to understand is trading sessions. You need to track and identify each session separately on a session-to-session basis, and sometimes on a weekly basis, monthly basis, and even a day-to-day basis, which meaning the last 4 Mondays. What was the average session our last 8 Mondays? You know, what happened? Usually during sessions, market will begin to switch to current market cycle or continue that cycle. Bank holidays is also a 3-day session or a 3-day cycle. So let's say bank holiday you see is up on the 15th. It's going to affect the 14th as that's a trading day, and more than likely the 16th as well. So you guys got to keep that in mind. Fourth thing is specialty tools and software to simplify your trading. That's what it's all about. In some cases, you guys probably may come across an indicator or something that you don't know the normal algorithm for, so you use it and it kind of, you know, helps you out. But if you're familiar with the normal one, and then you can use the indicator or software to automate the process, it works a lot better because then you know kind of like the flaws within it and stuff like that. So we're going to go ahead and dive really into those today. Alright, so you guys got that. So let's get into number 1, market cycle. Okay, so I'm going to show you guys a tool that you can visually see, and it's actually done by .0 trading. And let me see here. This indicator runs right around $300. Sometimes they got a discount like $150. And what this is pretty much a trend indicator that you guys can actually see. well, pretty much used, excuse me. All right, so one, and of course red is going to signify your sells and everything like that. Your blue is going to be your uptrend, okay? So 1 just means that, hey, a new trend just started. 3 means it's a continuous trend. 2 is pretty much a pullback, all right? So as we can take a look, and we'll just go back, you know, a couple of days. It's not too bad. So it's a pretty good starting point. So this trend actually started right here. So we see that it started to trend up, continued to trend, and then it pulled back, okay? Then it trend up, and then what it did was it did a trap. And basically it said, hey, now I'm going down. And then it said, hey, I'm going back up, which is not too bad, but you guys are really starting to see when it really starts to trap. So it did some consolidation, pull back to here, and then continue to trend. And this is a quick trap as well. So it says I'm going down, now I'm going back up, now I'm going down. So basically within this range, this whole price is just like building, well technically it's this, more so here. It's just basically trapping traders to buy, to sell, and everything like that. And this whole process is hitting, so then it breaks out above here and then reverse around. So you guys just want to pay attention to exactly what you're trying to do. Are you guys are going to always like try to go for just a complete trend change, or are you going for some pullbacks as well? I typically like to get in on pullbacks most of the time. I actually didn't notice it until I started paying attention. And the reason being because you will get something like this where it does that, so it's not too bad. So we can continue to see what the trend has been really doing. So trending down, reverse, consolidation, okay. Did the same thing here, reverse back over, reverse back down. So this is really trapping now. So it says I'm going up, going down, going up, going down, going up, going down, going up. So you guys got to pay attention to that whole thing. That's a really great indicator to use so that you can begin to identify what the trends are actually doing and everything in that nature, okay? So next one I want to show you guys, let's see, that's probably for our sessions, probably not that one. Not that one. Yeah, I got all my charts out. So it's probably the clean one then. Okay, so Fibonacci. All right, so I don't use Fibonacci, but I had another colleague trader that I dealt with. All she does is use Fibonacci. She doesn't use moving averages or anything like that or all this stuff. She just uses candles and Fibonacci. So she's very, excellent at the whole thing. What I want you guys to do is to use Fibonacci to identify range points. And also probably like some market placements within a market, okay? So what you guys want to do Fibonacci is you always draw the previous day. So make sure you keep that in mind. If we're going to get ready to trade for Monday, we'll be setting up this day here, but just for this example, I'm going to use this day. And you guys want to start with the body of the candle of the high point, okay, to the low. And it doesn't matter, well, whatever time frame you prefer, 15 minutes here. Let me edit that. That's too big. Let me put it on a proper time. That'll be quick. All right, so technically we're just using it as if that data is not there. Another thing with the Fibonacci, use the custom one that I have here. It is totally custom. If you guys select your Fibonacci retracement tool here, just plan it on your chart, and what you want to do is to double click and then select edit, okay? And you should have the same format here. So 0, description 0, 0.25, 25, 0.5, 50. Just make sure everything is there. If you don't got it, just select add, and it'll go and show up at the bottom, and you can just add that just like that and place it in to whatever the parameter is. So let me take that off. All right, so let's see, 0.5, 50, 0.75, 75, 0.618, 61.8, 100, 125. Well, that's 1.25. Description is 125. And then we got minus 0.25, minus 25, 1.5, 150, minus 0.5, minus 50. I keep the colors turquoise. So that is how you guys are going to set up your Fibonacci levels. Okay. So Fibonacci is going to help you once again get a range of motion. You know, it keeps everything nice and organized. All right. So you're going to take the previous day, make sure you guys are actually getting the body of the candle and not the wicks. And as we can see, most of the time it's going to stay within these ranges unless it's a bank holiday. Okay. You know. So as we can see, the market comes through, breaks this level, pulls back up, touch this level, comes straight down, didn't break this level, pulls back up, consolidate at that level. Okay. So it's outstanding when it comes to the ranges. So in combination with other things, this is going to help you identify how far of a trade you can actually go with these levels here once you kind of put everything together. But I just wanted to show you guys the way of actually going through it. Now, being this one, to be honest, you can probably go with it like something like this, because that technically is a starting point. For me and my experience, I would go up more so with this area, because I know that the way that the market is set up, technically, this is kind of starting from here all the way to here, so I'll probably go with something like this. And once again, we can see this whole thing going at. But it's his major market levels. The other stuff I mentioned as well, guys, in regards to harmonic patterns, Pitchfork, even Gantt theory, I've already got a approved list of courses that's going into advanced level. The thing about it is I have to review it and make sure it's valid content enough for you guys, and then it's going to be approved and just going to be added to the current launch. Okay, so don't worry about that other stuff. All right. Okay, so let's talk about different tools, as I stated before, that you guys want to make sure you have access to, because you do. One of the resources which we do have is the trade zone. So we give out trade zones as a part of, you know, advanced everything, FX. The other resource that we actually have, let's see, make sure you guys are utilizing it, is the Forex Trend Scan. All right, this is very good because it can help you guys identify patterns. Okay, that's if you choose to work with patterns, because it's visual compared to, once again, like I said, you just want to figure out where the current market cycle is. So you can just go straight on patterns, or you can just read the candles and working with just trends and pullbacks. So that's one of them. The other tool that we have, and I believe I saw it here, or is it? Nope, not you. So this is just a session indicator. Okay, and I know it's not precisely on it because I have to edit the times and stuff, but this is, you know, an indicator that just kind of highlight the sessions, and you get to see what's happening at just different sessions to kind of just monitor it and mark it and track it. There's also a correlation indicator tool you guys can work with. This is by PimLikeEA. As I was telling you guys before, if you can get one good analysis off of one asset, you can use the correlations and take 3 trades on average, okay? So the way that this is actually set up, and this is a 4-hour time frame, I typically like to use 1-hour time frames or 15-minute time frames, okay? So for instance, we're taking a look at Audi CAD here. So anything that's like really either in a green, and the higher the number, the better. So this is about 93% on a positive trend, so same trend. And this is 94% opposite trend, okay? And let's take a look really quick. So they're talking about Audi CAD. Let's see, Audi CAD. Let me see if I can find it really quick. Or I might just do another one. Just so simple. Different brokers will also have different assets, and I'll show you guys something really soon. So they probably don't got Audi CAD. So let me do Euro USD. I know they have that for sure, and those counterparts. Okay. Euro USD, let's see, 93 is going to be Euro CAD, same trend, 93%. Let's take a look at Euro CAD, new chart. I just want to show you guys, but later on, I mean, you don't really have to open up three graphs unless you want to. You can just use like a market window and take your trades from there. Okay, there we go. So 4-hour, yeah, so still trending, just double top, downtrend right now. Double top, downtrend. Hmm. 89% for USD JPY, so that is going in the opposite direction. So those are trending down, that should be trending up somewhat. Yep. All right, so we see double bottom trending up. So that's really good. It's one of the tools to just be able to take a glance. Hey, good to be on finally. Yes, yeah, glad to have you, Felice. Yeah, so let's see. Good little charting here. Still on, guys, just taking a drink and covering my notes. All right, so next, we got a ton I want to cover. Let me move this one over. So here's a different broker, Edible Markets. So they got different features in Expert Advisory. As you guys can see, they have a trade terminal window that you can actually place with them. On top of that, they got other cool things. Let me take a look and see. Where is it at? It's on my other screen here. I gotta keep dragging it over. So they actually have an alarm clock for once you're actually in the trades. So to remind you, take a look at their correlation map. Here's their in-house correlation map. So a lot cleaner compared to the other indicator, and it's much easier to actually see, pay attention to. So you're paying attention to really just red, and for the most part, green. Nope. The colors default, so it's orange, 72%. So 94% USD CAD and Audi JPY. So it's a complete reverse opposites, 94%. So you have a much bigger graph here, correlations, as we can see, Euro GBP, GBP USD, 92% opposites. You can actually see the chart. And then other cool features that only their broker has. Let's see. Okay, well, it's not too bad, but they usually have like active news and everything going through here. Now, the thing about these guys is, and you guys have noticed too, it's just different assets. So they actually have stocks. So I was very like surprising, because most of the time, brokers that really have like stocks and stuff, it's not in the type of MP4 format. So I can't like load like my alpha system and all that stuff to it. When I do want to use it, I got to use a completely different broker and just work with something else or whatever. So I thought that was pretty cool for them to actually have it. And then they have the really exotic charts. So sometimes if you guys want to trade those like on binary, then you have a graph that you can use it to. Okay, so let me get back. Take a look. Look. Now, the reason why we're going to take a look at the other indicators, or the indicators that I currently work with, is once again to identify ranges and buying and selling, pressure. That's pretty much all it is. So I like to stick with moving averages and the stochastics, MACD, momentum. So let's move into, I just heard something off right now. Okay. So this charting is pretty much alpha 33. And the reason why it's alpha 33 is just technically just 3 moving averages and 3 indications down here. So just working with some of my elite students. And they prefer to have the 20 moving average. And it's also really good for a range. So if you probably won't have access to this. Once the webinar is actually up, you can download the alpha system, and it'll have it in there. So it'd be like alpha 33, and you guys can select it from the templates. Okay. I want you guys to start using a 50 bar in there. Let me take a look. So take a horizontal line, slap it in there, and then go to properties for 50. Yeah, that thing is just stuck in there. It's not letting me change it. Okay, it's fine. Now, your stochastics here is just purely about buying and selling pressure, but you guys need to pay attention to the 50 range, because that is going to be pretty much your pivot point. And the market is actually going to play around with that level, bounce off of that level. You guys need to keep an eye up on that. All right, so let me go ahead and go back to more of this side here. Oh, it's so great. Pretty far. Okay, so that'll be good enough. So the chart is like way back there. All right. Now, rule of thumb is your white moving average, okay, is pretty much your entry point. Your exit is right around your yellow. So that is just like the bare minimum, okay? Once you have this kind of setup where the market goes below everything like this, then it's going to continue that trend there. But really, realistically speaking, it's going to be in this order: yellow, blue, white. And the candles are just going to pretty much just go like this. Now, rest assured, if this was to come up, on average, the highest it can probably go is like right around here technically. So that's a really good range to keep things at. The way that we're using this setup is we're keeping an eye up on primarily your MACD line here, which is the yellow, but what the momentum is doing. We want to pay attention to when the momentum crosses below your MACD line, crosses through it just like this, okay? So normally that's your first entry. Your second entry would be your other kill line here. And we'll probably just mark up the chart so that it's way better. Probably here, really quick. So this did go above that range, which is still fine, but I'm taking a look down here too. So I see a sell entry here, but the only problem about it is if you guys did get this sell entry from the white moving average here, as we can see, it just touched down to your 20. So I mean, that's just pretty much about it right there. But the market stayed up really in this area. Your Fibonacci point is also there, so that's a real good stopping point. But just paying attention to it crossing through here, right around your 50, and then bounced all the way back, and then came back around, right around this point area. Entry would have been right at this level. Minimum profit should have been right around here, so 10 pips, but it did continue to break through this level, and as we can see, the pullback occurred. All right. So you got the little ones downstairs, a little noisy. So in my case, using this, I would just more than likely take the pullback. Definitely, just prefer to take that. This range a little higher than expected, but then again, it was kind of just choppy through here. And we can just see what's next. And we can see it's the same thing, come through, consolidate at this Fibonacci point level, played around, bounced off of here, stuck within this range of the 20 zone, pulled back to here, and then pulled up, got stuck at this level, pulled back down, but stayed above your yellow, but still signifies the uptrend. That's pretty much what it's doing, and then it reversed right around here. So the 20 moving average is really, really great for some traders, just because it doesn't move as quick as these, and it's also a good range point to identify when to get out of the market. So in combination with your Fibonacci setup, you guys would get some really, really sharp entries. All right, now Alpha 007 is very similar to Alpha 33. The only difference is that 007 was created for sniping. well, as a sniper, you're just taking trades every time, the market trend and everything like that. But to be honest, there was no moving average starting off. It was just pretty much candles, and it was not our MACD line here. It was just your red and green. And then we added the 20 moving average just to get that gauge of when to get out and everything like that. But the best part about this, and let me take this off, Alpha 007, is more of a precise trend change. So I mean, it's a lot better than stochastics in my opinion, unless you're following like the looping or anything like that, which is complicated for some. But as soon as green is going to be the primary, so as soon as your green crosses above or below your red line, that signifies the trend, okay? So what they would do is wait for to cross over on a moving average and then go for some pips. Get out at the yellow. That's it. And they would just do this and just scalp it pretty much all the time until they got their goal there. So here's it trending up. They would get in right around here, take a buy trade, get out at the moving average, so 20 pips, but just like really scalping it down. Market tested this 20 meter here, crossed down, and this is definitely a news announcement, so you can take a look at that. And let's see, then came back up and turned around and broke, but that's because of the news. That's overextended. And I'll show you guys how to get to the news in a minute. That is Alpha 007, just scalping trades. As soon as the market trends and getting out around your mid there. But like I said, it works great with the other combinations. Let me take a look at this. So you guys can see fib level here, that's where it stopped off at. Then came back around, broke through that, and just took off. So that's good for the ranges to pay attention to. So currently got the buy signal right here. Probably be good for like a 30 pip trade estimate. I would probably keep it right here because of that 25 points, so 24 pips before it retraces, because most of the time what it does is hit a level and then retrace back down, but do not break your previous level and then pull back and continue to climb. That's most of the time unless it has some volatility like this. I'm out of water. Okay, so questions so far about what you guys are learning. Do you understand it completely? You kind of got on track? What you guys are going to be looking for? Let me other notes here. So number 5 is really just identifying your trading preference. Okay, are you guys comfortable being a sniper trader, just kind of getting in the market and getting out, taking some pips? Are you going to be a intraday trader? Are you guys going to be a swing trader, so you know, come across a couple days? Binary, I mean, it's pretty much the same analysis when you guys are trading binary options. The difference is the candles that you're using. 5-minute time frame is going to be a lot better to take a 15 to 20-minute trade. I mean, that's just, you know, pretty much how it is. Make sure you guys are staying within a prime time too, first 2 hours of the session. Got to be enough activeness to it. These just basically just bounce off of that range. MACD is under, so it's going to be an explosion once it comes up. But we can tell that this grain, as we can see, crossed over there, wasn't good enough. Then crossed back down, crossed back up, bounced off of it. But either way, if you guys are looking to take a trade, make sure that you have your exit point, okay? Even to my understanding for binary, starting off at this and trying to get off here, you'd have probably got out like somewhere right around here, lost it. No, these 5-minute candles. So yeah, about here or here, lost it, and then got back in that trade again for another 30 minutes. You'd have probably lost again, and then took an entry somewhere right around here, and that would have been like slot 2 or slot 3, and you'd have got out right around here. So I mean, for binary, that's like you guys just got to make sure you're using like a 5-minute time frame to take your trades. The other thing about it, on binary, I want you guys to focus on, let me see if I have it up, is getting used to reverse ADX crossing with binary. I mean, it's great. It's excellent. So you guys, and the thing is, you can have about 3 to 4 charts at different time frames, okay? So reverse ADX crossing is very simple. In this situation here, you get a candle and the ADX is a completely different color. So this ADX needs to get filled. Okay, it's going to get filled within the next 1 to 3 candles on average. Okay, so this is just perfect for using slots to take some trades on longer time frames, such as 30 minutes. When you get something like that, you guys can use reverse spread and still extend that. So for binary, you know, I think this is just a much more easy way as well compared to like Alpha 1 or Alpha 007. There's a goal schedule that I do have for binary that I want you guys to follow. I haven't traded that schedule in so long though, to be honest, but so I'll just go ahead and go over that video and post that probably in like the mastermind section for you guys to review it. So I went over like some schedules with Raphael and recorded that video for him. So you guys can review that, and it shows on what I was doing with gold and everything. Just keep me updated with it, just in case I need to go back and just redo the schedule or anything like that when you guys are having schedules. Binary option as well. Trading oil. Use the Power Day schedule. Use Three Sisters schedule. Okay. If you guys don't have access to oil, just let me know. I can get that for you. So that is, I mean, it's powerful. Seriously, you guys can make 6 and 7 figures just off of one of those binary schedules with oil. Yeah, it's like a cheat. All right, so like I said, first thing is Alpha 1. Well, technically, first thing I'll probably go to is more so the Alpha 3 with binary, reverse ADX crossing. And once again, it's going to be filled at 1 to 3 candles. If it doesn't, like another candle come behind it, like this, so this is reverse ADX, the green has to be filled, but this comes down red, okay? This does not count. So now you got 1, and the second candle it's up. So let's say, you know, as soon as this closed out, once you guys see that candle, and that's why you have the candle timer there. Once you see the candle, then what you guys want to actually do is to get in the trade for a call position. And once again, keep an eye up on it. If you want to reverse spread it, that's great. If you don't worry about it, and move on to the next slot, slot number 2. Take the trade there, you get out on this candle. So you've like made some money. And that's your binary options. Okay, yeah. So with like oil, yeah, oil would be great. I can get that out to you guys. So that's the first thing, as I stated. You guys can use Alpha 007 to take some entries on 5 minutes. That's pretty easy. Leverage, because you guys got to understand with binary options, the potential and power comes with locking in the market ranges. I mean, that's what it realistically comes with, and plus the time base is so time based. It doesn't kick you out. So that's it. You guys need to understand how to do reverse spread, because I mean, you can come up with some serious money using reverse spread and using slots. Slots is very great because it gives you market feedback. And you guys are having bad entries, then you know you're going to probably be winning on slot 3, slot 4, slot 5. Okay? So I get some of my students say like, well, I want a high winning ratio and everything like that, and I'm trying to get to you guys that consistency is number one. I know millionaire traders that's been trading 10, 15 years, and they got a winning ratio of like 58%, 61%, you know. And when guys think of like, oh, binary and Forex, well, they're trying to get, 85%, 95%. So the key to that is really just consistency, mastering the tools that you guys have, so reverse spreads and everything like that. All right, so let's talk about Forex now. So number one thing is projected volatility, news. We know that when the news come out, there's a ton of movement that's happening. Okay? Just to simplify, keep it easy. Forex Factory, I mean, it's really good. Just keep up with the rep holders. Most of the time, it's probably just the time itself. That's just how it is. So 4 a.m. it's really good for all of that Euro rep holders, like really good. 1 p.m. It's a bank holiday, so that would affect it, but the ranges are still going to do its thing. It's going to be really good. So in order to keep up with your ranges, I recommend probably Alpha 33 over 007. Alpha 33 is going to have a more effect because it's more of a momentum, MACD type of thing. So when these announcements come out, it's going to catch it. More than likely, this is probably an announcement as well as overextended. So and we can see prior to here, everything was exposed. And then your momentum came down, this and that. So you're even looking to take an entry technically as soon as you got to that moving average. So second candle on a moving average is here. That's pretty much where I would like to get in and take that entry. Now keep in mind your MACD is still up. That's the reason for the spikes here to get you out of this trade. So be comfortable with that. So 11 pips, 13 pips here, but then it slams down, hits it right around there, then continues to trend down to this level, trend down to this level, trend down to this level, and always down to here. So I mean, yeah, this Fibonacci stuff is like insane. Usually I can chart my own using my candles and everything like that, but I know some of you guys was not understanding how I was doing it. So the Fibonacci levels like that is perfect for you. Yeah, but I've charted my own before and lined it up. And I mean, I'll probably hit, I don't know, like 3 to 5 of these points. So that's really good for the volatility of the news, okay? And Alpha 007 will probably be great as well. All right, so don't worry about that. Other technique I use for news is called counting pips. If you guys reviewed oil, you know what that is. My news trades, all right? Let me get it here. My news trades, Okay, if I'm correct, so 15:15 on a candle. That means it's 8:30 in the morning. That's what it is, 8:30 in the morning. This date is January 21st. Let's take a look back. See what happened January 21st. 8:30 in the morning. Euro USD powerhouse. And if it was all Euro, really good. Euro USD, that's why you have this whole Jack thing here, and I'll show you what happened. So I did a quick tug of war. So from here, coming in, taking a look at this thing right here. I am going to, probably about 1 minute before, I'm going to mark from this point area 20 ticks above, boom. So right here, 20 ticks. Let me eyeball it. So right there. Now I'll show you guys. Let's change this. The 20 ticks above, let me see, that is going to be my buy. And 20 ticks below is going to be my sell. Okay, locked in. I see it's probably right about here. Yeah. Okay. Let's do it right here. All right, so news, and I do this all the time. I actually don't pay attention to none of this other stuff, like moving averages and everything. I'm just trading news and ranges because I know what to expect. So once this hits, once again, you guys can do pinning contract orders on either side. That's going to be best to do pinning orders, okay? Because it's going to be too fast for you to actually place your trade. You're going to miss it. It has to be pinning orders. Some cases, you'll probably get some time to place it here. It's not going to happen most of the time. Trust me. I've missed out a ton trying to place it, eyeballing and everything like that, okay? So I usually do 20 pip breakout on either side from the point before the news time, okay? My stop loss is 10 pips because I'm expecting it. So it goes up, and we can tell it went up first because of the spike. So that's the end. It's not going to do this down and then come back up. So it went up. I was placing that trade. Usually I go for right around 20 to 30 pips. Shoots all the way up to here at 35. So that's not enough. I need to be, if I'm breaking out, right around 50 or 40, okay? So you can do that, I mean, because your entry is right here. And I'll tell you guys what I do. I go for on average 20 to 30 to be honest, depending on what I'm trading. I trade oil most. So my oil, I'm looking to do 20 and go for 30, okay? This would be a little bit different. So it didn't hit, but take a look at this, okay? It's going to reverse. Once it reverses, it's going to hit your 10 pip stop. As soon as it hit your 10 pip stop, reverse the trade immediately. And what you guys are going to do is to go, instead of going for 30 pips, go for 40 pips. And boom, you're going to hit your 40 pips, okay? If you want to work with using a trailing stop after 40 pips to activate, or 30 pips activate, you'll be able to eat up pretty much all of this, and then it's going to pull up. And this is like a news trade. All right. So it just has to be before the news come out and major news that's going on. Yeah, I don't worry about the other one. So WB Terminal, we have this one too. If you guys want to use this, I mean, you can. Just pay attention to like this format and everything like that. But it hasn't been like too much more from Forex Factory that I've seen. And I can tell you guys, let's see, so it's been doing that stuff too. Keep it simple. Euro USD, 1030, natural gas, USA 1030 is a big thing, so let's take a look at 1030. That should be 1750 candlestick, at least for my time. Let's see, 1750. Reversed actually at that point. The 1715 is right here. Market just came down, hit 10 pips, came all the way up, hit 20. Let's take a look. So it hit 20, dropped down, hit 10, goes back up. So it's going to do this whole thing, reversing and trapping through here and then break out above. But I've had days like this where I've trapped it in and got my stop hit like 3 times, and then it shoots up like this and it makes up for all of that. But that announcement, I mean, it's not that much because it's not like a real red folder. But during those times, the market is still kind of do its thing. Let's take a look on that other one. Let's see the 21st really quick for it. 21st. Got a ton of things going on. So I mean, prior to that, we did see that our MACD here, yellow line, was actually exposed. Then it kind of just held up above high. Well, these guys were already kind of like messing around with the range here, as you can see, pulled, looped in, bounced off. But as soon as this, your tail line right here, crossed under, that's when it signified the sell trade. And then you got your pullback here. That news came out, kicked traders from following, then it just shoots straight down. Then I'll take a look at the other one. So again, with your Falcon code here, momentum cross above. Good entry point for a call would have been right here with that moving average. Estimated take profit 45 pips. Saw down a little, shot up like 73 pips from that point. C007. As you guys can see, 007 is a little bit more precise with it. Just a tad bit more. It's a sniper. 007 cross right around here. Yep. So across here, what you guys got to take into consideration of the pullback. It's meant to kick you out. Same thing with this one, meant to kick you out. And let's check this range. The 24 pips. And crash through there. Pretty good to your 20 moving average, like really good, because most of the time it's always going to be like this at a gap. So when you do get it like that, that's a really good entry. Okay, so you guys got understanding how to count pips, do ranges. Let's see. The GBP has been going really, GBP, JPY, GBP, Swiss franc's been, man, that thing's been coming out. We can see the 20th, okay, 20th right here, Wednesday, 4:30. Let me take a look. That's 15, if I'm correct, that's like 11:15 for the candle, GBP. We can just do a range on it. GBP, USD, 15 minutes. Okay, so 11:15, I'm correct, is right here. Start of market, 11.15 right there. Didn't go up. It broke 20 right around here. So my entry would have been for sell right around that price. So somewhere right around here with a 10 pip stop. Hit 24, then pulled back up, dropped all the way down to 70 pips. And that's just based on just that announcement coming out at that time. And that range. So it's like a market kind of like shortcut. It's also really good to identify trends if you guys are in like a trend cycle. So you may not even want to trade it, but you can actually use the news announcements to keep up with those trades. I mean, all the way through. And this is basically what we would do, because let's say you take an entry somewhere right around here, and then you take a look at your news, and based on these ranges, once again at this time, 20 breakout, if it goes such and such, that's an uptrend, okay? So this news announcement, you could have used it as a marker placement. So this is what I do at my trading schedule, this is what my expert guys do. So once they're actually in a trade, maybe from a different analysis or something, to gain more pips, let's say it's already been up, 40, 50 pips. They're going to keep an eye upon it with these news announcements. Oh, okay, it broke out, so it's going down. It's going to continue to go down. This one by, it's continuing to go down. Oh, this one, now it just reversed up, and then this one, oh, it's coming up. Let me get out of this trade, because it's probably going to pull back up, and I'm at like my most pips. But if you notice that, oh, the announcements, breakout ranges that you identify, that most of it's been like a sell, due to that range, it's like a really trend. So for that day, it's probably going to trend down pretty good, or even the next day. So that'll help out with market cycles. All right. So number 6, you guys want to always pay attention to what is the risk and what you're exposing in the market. Always focus on that. Don't focus on profit so much. It's great to be consistent, but you guys need to pay attention to what you have at risk. If you guys are using our FX signals, I told you before to make sure that, that when you're taking trades like Forex and all that stuff, 2.5% to 5% per trade, but no more than 15% across all of that. So it's about 3 to 9 trades. You don't want to have more than 15% across there, okay? And the advanced signals, the way that they work is they like to use large pips, or like a $1 pip or 100 pip stop. But you guys want to make sure that that 100 pip stop that they're sending out for that is actually still valued to, 2.5% of your trading account. But you don't initially want to be trading, 30 pips, and that's 2.5%, and then you guys set it for 100%. 100 pips, because that's going to be more than 2.5. So you guys got to do the manual calculation, and there is that, what is it called? Our Forex calculator within the news email. So I can see if I can try to pull it up over here. If I have some. Yeah, I probably can't because I don't have that password. Let me see. Okay, so I got something here. Okay, let's see. Yeah, I'm going to see if I have it in my email. Sometimes we get it. I know I get it in my personal one. Recommended trading. And okay, there we go. See if I can pull this up. No. And I went into a older one. All right, okay, so that is that one. Yeah. So, you know, you guys got to make sure that you use something like this whole format here. So there's different variation calculators, but whatever you guys can use. So if it's like you guys got an account size of $1,000, you want to go risk size, once again, 2.5%, 2.5%, 100 pips, and they're going to give you the lot size that you pretty much need to trade, okay? So that's basically what you need to do when you guys are taking a calculation. Same thing if it's 50%, 50 pips, excuse me, lot size, like that. You guys go like this. What's the lot size at 50%? 5% of your account, 50 pips. So that's just pretty much it. Just make sure you guys are aware of how much you are actually exposed with their signals. Binary, make sure you're paying attention to the other webinars too, intermediate, novice, everything in that nature. Even basic, if you guys want to get like much better at the lower level techniques, because I mean, once you guys can master it, you can make money regardless, okay? Just consistency. So the seventh is, once again, to document everything that you're doing and to learn from your mistakes. Even the things that we're talking about within here, with the current indicators, if you guys are using them and just having problems or whatever the case may be. That's the whole purpose of portfolio analysis. Make sure you guys are sending in your active live trades. It's really good to send in your practice accounts and stuff, but it's going to really come in handy when you guys send in your active live trades. It looks better. Okay, so let's take a look and see what we got going on here. So let's see if we can do a quick setup. Auto scroll. Asian session. I'll probably do 007. Mid-range is there. Here we got here. So currently right now, this is looking really, really good. I'm expecting this to come up and probably touch this level and pull back here and then bounce off of the 20. Or what it's going to do is to do it from here, touch this, pull down, bounce up, then shoot up. Or it's just going to trend up like really, really good. There's some movement that happens during Asian session, which ranges right around this time. So 8:50, technically it's 8:45 till about 9:15 on average. It will do this. You're going to see a huge spike come up right around 9:05, and then it'll reverse right around 9:15, 9:30. If you need to continue to watch it, 10:15. Okay, so that's really good coming in. That's usually what it does. Typically the behavior for Asian session. I haven't traded Asian session in so long, but it's one of the easiest ones to kind of just understand and to, in a sense, work with. So Asian is probably number 1. Number 2 is USA. Number 3 is London. London is always the hardest for some people because they can't handle the range of the, like the volume of it, the volatility of it. They can't handle it. So that's on a 15-minute chart there. Let's see. That's still last confirmed that it's actually going up, so uptrend. When it's ready to come back down, even for the pullback, the green line's going to cross your red here. But this MACD is probably going to come up to meet your 50. If it doesn't do a double bottom here on the 20, it'll just probably come up and average just like this. Just average like this, and it may break through or just may just dip back down through here. But we do have some potential of some buying power right now. Take a look at a 5-minute. So let's just cross right there, then pull back. So for binary, as we can see, it's a lot sooner for entry. So just broke it first right here, then kind of just stalled out, went up, pulled back. So that's the bounce back on it. We got the confirmation that the trend is indeed going down. Then comes around here, bosses back up through here. Once again, I showed you guys that color pattern, yellow, blue, white, signifies a strong uptrend, especially since the candles are all above this order right here. And then when they spread out like this, fan out, that's like really good too as well. And then strong sell trends, yellow, blue, white, candles are below, like this. Let's see, this is okay. The Fibonacci point is there. Let's just cross that. Just watch it for a little bit. Okay, now we got some movement because of that 9 p.m. Yeah, ADX crossing went off. I got so many templates. Expose, that's the pullback to the upside. You guys seeing that? So it's pulled back to the upside right now, so this is going to be a trend, downtrend. That's what it's doing. So your next candle should close down if this closes that way. So most traders to get into here, it's trying to kick out traders. So probably from that entry point opportunity down to here. It's like the range. Let me see if I can set up. Okay. Get back. And as we can see, this Fibonacci is very precise. And it's only because of the custom levels. That's it. I am not impressed with Fibonacci, but this custom levels, I was really impressed with it. So it just literally came up, touched this range. The potential is right here. more than likely down to here at this point. This is your USD, okay? We see that it did spike down to there, but this Fibonacci point is holding up pretty well there, okay? And so that's the sell trade. I am wondering if your MACD is going to bounce off of this, but if anything at a double top, if it breaks this point, it's going to travel higher. I'll just draw out on something. Today's the 24th. 7:30, Audi, 7:30, 9 p.m. 9 p.m. is major. Let me track some ranges really quick. Just to see 9 p.m. Okay. Just tracking it. A major point that I know that does have some fluctuation, I wouldn't mind just marking perimeters of that 20 breakout range like I was telling you guys to identify, but it does look like a reversal is going to happen. 5 minutes, 5 minutes. There's that spike up. Not what I expected. I want to take a look at my trends and see, just so you guys can see what it did. As you guys see here, it's starting to signify a sell downtrend. Did trap a bit through this area. So one went up, went down, went up, went down, went up. Now it states it's going down. GBP. Let's see what GBP is talking about. I'll take a look at that Euro GBP JPY. And it's clean. Clean chart. Not too much trapping there. So down, up, now it's coming back up. So this is probably going to be much more successful for that whole trend and just a solid trend as we can see here. So 1-3-3-3, pull back, and then it says, oh, we're switching, and then switch back. So 1-3-3-3. So very good, a lot easier than the Euro there. Euro's too much tug of war back and forth because it's major assets. Just holding on that level. Still climbing up. More movement breaking resistance. All right. So questions. I want to make sure you guys understand everything that you're reviewing right now. Focusing on selling power, buying power. Want to identify, you know, the ranges. So we have the custom Fibonacci set up to identify ranges, major market levels. Trading schedules. Once again, if you guys don't got access to oil, it's fine. You'll get access to it. Power day for that. Three Sisters. It's just moving up, still trending up. See, there we go. I think that looks weird. We'll just see what it does with these. Just have a point here. Probably keep doing this about, like I said, 10:15. Usually I would take my entries right around 9:15 and then get out at 9:30. And then sometimes it'll happen again, the second cycle, like at 9:45 to about 10:15. Yeah, the Fibonacci, you're looking for it to be the previous day, high and low, okay? So that's all we're trying to figure out right now. Let's see. It's my session map for it, but so technically the day started right here, so according to your line. So the high and the low of the day. And I want to be the wick, not the wick, the body of the candle. So that's really great. Once you guys can understand this, I mean, it's perfect, it's great. Later on, you guys will probably move over to market keys, which is strictly price action. So my elite guys are on the market keys, and my expert students on market keys, just price action, and really excellent. All right. So this session between these two guys is actually reversed up really quick. You can take a look. This one started, that one's in it. Between that, there was dual sessions. I actually did a quick reversal and switch it around. When these two were on it, just basically just consolidated and trapped until London closed. And then it finished the trend, trapped right here, and then broke out. Let's see. The uptrend created a top here or a high as they know it. Once it closed, this kind of just consolidated prior to this actually opening here. That major news announcement, once it cleared up with that double there. Comes all the way down. Once London's closing, doubled out, started to trend again. Euro USD. It's trying to get out of its range, trying to take some pips. That's what it's doing. So they're taking advantage of the closing point, which I was aware of. So another time, I think we always discuss not to trade the closing hour until you guys really get used to it. So first 2 hours. This whole thing here is in trap until it closed. Once it closed that session, I do believe this is London session, so it's supposed to be Asian. London, USA. So London closed, and it formed a nice trend and reversed that trend. More than likely, news announcement. 1700 is a 12 news announcement, I believe. Yeah, that'd be something 12:30. So it reversed as soon as this closed out. Consolidated. Did a double bottom here. All the way up through here. And still, after that close, it continued to trend back up, then reverse that. So just kind of get an idea, but it's more so for documentation. And you guys are just stocking it for your own preferences. GBP USD. Let me see. I know. No. It's the other one, GBP, JPY, GBP, Swiss francs. This amazing. Let's see. So I mean, this thing has been doing some heavy pips. Heavy pips, as we can see. Swiss francs and JPY. So even like starting this day, coming in, did this whole play around, going back up, going down. Came back through here, stuck around that 20 moving average. Cleared the doorway. Did this again, did this again. Last time it's probably right around here to take the entry and rise it up. So across that, but announcements on it. This is an announcement that happened January 19th. January 19th, GBP 430. I know because I was keeping an eye on that. GBP 430 pulled out, then Euro once again at 5, and then 7 a.m. for GBP. The 7 is probably 14.15 if I'm correct. Let's see, 7, 14.15 or 13. It may be 8 is 15.15. The 14.15 is right around here. So broke out 20. Continue to keep it. Drop down to 66. So 50 is a 30 pip gain. So that's based on that. But prior to that is the other news announcement. So I believe it's 5. So that's 14.15. Let me check my chart really quick, my timing chart that I have. It's getting late. My brain's not keeping up. Visually see. Yeah, so 4 a.m. So it's 11:15 for that one and 12. So 11:15 is that one, so that's 4:30. 12 was this one here. I think the last major one. So that range is 17 pips, 20 pips right here. So that's from 12, which is 5 a.m. Yep, so 5 a.m. 4:30 they have one, but 5 was a lot better. So that's 12. Let's see. That's 5. Place one out. 4:30 is has to be this level here. 11:15 candle is 4:30. Broke out 20. Hit 28. Come back. Hit your stop here. So you would have been getting back in for the sell trade at this point, which is right here. Would have been close call on your stop with another 10, but came down really, really good. More than likely, if you did a trailing stop, you would have been stopped out somewhere right around here, but still 100 pips, 150 tips. Yeah, 150. If you guys are using market levels, you can identify where that may have ended. So 240, 243. For instance, that other news we did stated came out right around here and broke that range at that next time, and then it confirmed a down, trend and all that. I would have to check to see if another news came out right around here. 6:15, so that's like 9:15. Let's see. $9.15 there, but we did get this that came out at 9. So that could have definitely affected it as well. So to watch that. But all in all, I mean, that's just keeping up with the trend and just seeing where it's been going and everything from there. Fibonacci point, let's take a look. Body of the candle is here. That is here. So I mean, even just marking the Fibonacci on the previous day, from this point to that highest point, and you did decide to take a entry right here, or the entry right here, or the entry right here, you guys can clearly see that point is where it did retrace, came back, didn't break that level, and the potential is still, once again, this level and this level. So this is kind of like perfect. And then the previous day it actually broke past that level. So I mean, this is like really max potential that it actually took advantage of. Oh, if you guys want to do a hangout this month, let me know too. Okay, let me see. So I'm trying to keep up with it once a month for hangout. I'll probably do one Saturday. Yeah, probably like Saturday, just kind of touch bases on this month, Q&A hangout. Yeah, I may do that Saturday. I'll post it inside the student lounge just for current active students. Okay, so let's see, purpose, the purple line just on the mediator, or does it indicate some other purpose on the stochastics? So your purple line is pretty much your pivot point. The market is going to play around with this purple line. Okay, so that means it's going to bounce upwards, as you can see here. It's going to bounce below it. It's going to loop through it in and out. and then it's going to officially cross it. So that is like the mid-range. Just understand that, you know, your most power points are right here above the 80 and below the 20. That's your power point. I mean, it's a lot of pressure coming out through there. But now you get it right here where you see, well, the market's been, you know, pretty much just hanging around this purple line. So it's technically, this is like more so of a scalping day. But this really did signify an uptrend because of the moving average being in that placement, as I stated, yellow, blue, white candles are above it. Then it dipped down, just tested, reversed back up, shot back through here. Let me move my points over to, I want you guys to see physical. And let's take a look. Yeah, see. So previous day high is right around here, right around here. The low is right around here. So coming in this day, I mean, you guys have been able to clearly see some nice solid reference points of what's going on with the market. It's been hanging through here, topped up here, then touched this area. Crossed. I would have looked to take it as soon as it bounced off here. To take a entry right at this spot, only because it did cross this moving average. Now, with that being said, we know that our exit is probably going to be something like here or something like here. Coming through there, let's see. And then it did signify a uptrend once this price crossed above it back. So it's like, hey, uptrend. Starting off here, that's a pullback. It's not too bad, but it would try to kick you out from here. There, as you can see, 20, the 20 range. So this fib point is like really keeping it in, and then it bounced off to here, which is 50 pips from there. And then eventually broke through on following day. And let's see. So, and that's just everything going on with like the following day. But, you know, once again, that's exposed, really good. So when it's exposed, we know it's going to probably have a strong power to actually come down. Let's see. Which it did have some downs from here. Let me take a look. It was not working. Yeah. So that was exposed temporarily. So this pulled down, and then this pulled down, and then it really went back up. Even using the other one, if you guys are using, let's say, just Alpha 1, you want to stick with Alpha 1, make sure you mark that off too, that trend. All right, so once again, it's still at 3. It's still trending up. We knew this trend down, like I told you guys, that was the pullback to the upside. Good for a sell trade. Look what it's doing. It can bounce off of your 20 here, but we know that we definitely have a strong point here. That is climbing up, climbing up. More than likely, it's going to touch that range. Power, power, power going on with your uptrend. But we do see our MACD green line is probably going to cross down below, which is going to signify reverse. The only thing that's keeping it up is your MACD here. So that's keeping up the flow of this trend. But that thing is ready to turn around. So simple. There we go, just bounced off. As I stated, what it's going to do, play around these ranges. Something just happened. Okay, 927. So we got some movement going on. Now we got 1, 3, 3. More than likely, this is going to be to pull back to the upside. Okay. Or what it's going to do is to track. So it's going to give a 1 here, but this is probably to pull back. And let's take a look. Yeah, looks like a possible pullback. I don't believe it's going to be a reverse trend only because the MACD here is exposed. So once this comes down, this will probably come up and cross this and then loop back right around 50, come down and meet up right around here. Now this is overexposed MACD right here. And that's 5. Let's take a look at high time frames. 1 hour. Here. So 1 hour time frame, as we can see, that's the low point. It touched our 25, then pulled back. This is actually underexposed. So got some buying power. But don't confuse it just because it's two different things on two different timelines. All right. We covered this trade right here, right, guys? So that news not, yeah, we got it. Okay. So really, really good. That moving average, we can see trend down pretty good. Entries, exposed MACD. Your market actually just crossed below your white moving average, which is not like really good. Got that formation, yellow, blue, white, but then pulls back up. And as we can see, trend did cause it to pull back up, looped around your 50, came back. So that's your entry point to get in the trade for a sell. And this is really good because your MACD is actually above it. I noticed that when it's kind of like this whole thing, yellow, blue, white. I noticed it on there as well. So it'll be yellow, green, red. Or in this case, yellow, green, red, or red, yellow, excuse me, red, green, yellow. But entry point would have been right around here. And it's based on this crossing back down or sell trade. Okay, so that's entry point. On top of that, you have a red candle cross your white moving average. So understand that your basis point is going to be your yellow. Okay, so it could retrace from your yellow, kind of do this, and then pull back up. But it actually did break down through here, which is really good. So that's also another good indication to take a sell trade. But the problem is you may not know where to get out, you know, how far it will come down, and that's the part of using your Fibonacci setup to know when to get out of that trade. Possibilities, your possible profit. Let me double check. That's there, which is great. And as we can see, entries somewhere right around here. Possible exit, first here, 20 pips. Very possible. Second exit, 52 pips. Third, 89 pips. Right here, 120 pips. Right here, 159 pips. Now, to be honest, I wouldn't try to go all the way down here. I really wouldn't, unless you guys are tracking announcements from that point, because it's out of the average range. So it's no longer within the average range. This is not something that happens every day. Okay? So I'll probably just check some announcements, see what's going on, and use that 20 pip breakout, everything, and I can probably guarantee that right here, 1700, which is 10:30, major announcement came out, and that's for January 15th. So by then I got to depend upon this. 10:30, nothing. 10 a.m. Okay, not too bad. January 15th. So 10 a.m. news actually came out, but 10:30 is still a major time, to be honest. Let's see. Give me a second, and I'll go back 10 because it's no longer in a range, but we know we got that announcement coming out at 10, which is going to be this candle here, 16:45 at 10 o'clock. So I want to know, okay, so 20 pips up. That means it reversed. It's going back 20 pips down. Boom. That's my other sell entry. So now my sell is right around here. I'm going for 30 more pips from this point. Boom. Hit 30 pips. I'd have been out of there. I'm like, okay, got my 30 pips and down. I'm done. Normal breakout range I told you guys before is 20, 50, 100 from a really good entry. So something in this case, when you're going with a 20 breakout and you take profit is 30, that means it's technically a 50 pip range. You wouldn't be able to go for 75 pips, so an additional 25 pips to expect a pullback. From there, hit your 100 pip mark. So I can probably estimate that the pullback is after 25 pips from this point. So that's 38 to 50, so another 25, which it didn't, and that's 85. So it still really didn't come close to that 100 pip mark. From here, max 90. It's still pretty good. But it's just basically just utilizing the market knowledge, okay? So when you're like this, it's not in, you're kind of just freeing it. Use that announcement to gauge, okay, your estimated take profit zone. Like I said, stop loss, I always keep my stop loss right around 10 because I do plan on re-entering the market and reversing either in the opposite direction, or what I'll do is wait until it retraces back to that level, okay? So in this situation, let's say if I was to take my trade here, okay. Let's say, and this is just an example in regards to this setup here. I would never take my trade here for sell, ever. But let's say if I did get a setup, it looked really good and everything like that, and I was using a 10 pip stop, and I took my entry, and this candle comes up, take my 10 pips out, okay? So my stop was hit. If I do not want to continue to consider market in the opposite direction, I'll wait until the candle come back down and hit my re-entry point where my stop loss left off at. So my stop, let's say, was here. Then I would take my sell position back again. So this is my re-entry point. And then I would continue to flow. That is also a way that I'm able to have 2 pip stops, okay? So what I used to do is I used to start from 20 pip stops. If you guys can get it, use right around 30 pips. All around average is great. Most like really good ranges is 30 pip stop. It's really, really good and excellent. It's kind of like easy beginner mode. Once you get really good with 30 pips, drop it down to 20 and watch it. Then start to work with 10. Then pretty soon what you guys can do is to get in a market just like this. Your stop is like a 5-3 pip stop. The market comes up, hits you out 3 pips. You monitor it to see if it would reach your 10 pip area, okay? And it actually did. And then you get back in once it retraces back at your 10 pip area, or basically your stop. But I'll probably wait for it to retrace back at your 10 pips area just to keep it simple. So it comes back down, and then you get back in the market. This way, you've only risked right around 3 pips, and re-entered the market. with the successful trade. So when I use like my market keys and everything like that, that's exactly what I do. So that's the advanced way of having like 2 pip stops and everything, because you're going to understand that the ranges that are pretty much the same, so why give out an extra 8 pips? And I can just watch and monitor it, you know. I would do the same thing if I used to have like a 30 pip stop. I would just set my stop at 10 pips and then monitor it like as if I had a 30 pip stop, and then select it there. So W7, really good. So you guys are getting it, you're understanding it, you enjoy this style of trading. A lot easier, much visual for you guys to understand what the market is doing and your levels of when to get out, when to buy trades, when to enter trades, how to manage your stops. Yeah, okay, sniping, I mean, it just kind of depends, 5-minute time frame. It's like pretty good, it's just like average. And I mean, it's just, you can just work with even like this moving average here. So as soon as it crosses over, you know, start to take your entry to the buy and just kind of go for it, monitor it. So broke below, drop straight down, cross over, buy, broke below, not too bad. Okay, broke above, market times, let's see here. That Asian is very, very not so good all the time. Asian, most of the time Asian likes to track. But even still, came up to here, pulled down. So that is like really just, my opinion, just come up with like a basis of what you're trying to do. To be honest, if you want to do, let's say, 5 pips every time it crosses your yellow moving average, you'll probably go way successfully like that, okay? Just understand, I mean, bare minimum 5 or 10 pips that you're trying to do. I'd probably do, I don't know, like 5. Start off like something that you can definitely feel comfortable with to build the confidence up to the consistency. And that's just based on the moving average. So as soon as it crosses the moving average to get in. And you can see this asset is also a specialty one because it does range and there is some volume. And then other things would help you, of course, identify much better, accuracy. So coming through here, just cross down below, 5 pips, pretty easy, went way past that. Just crossed above, but I mean, didn't go anywhere. So let's say you just took the entry right here, set something small with your pips. I'll probably do like a 10 pip stop, to be honest. Or I'll do like a 5 pip stop and monitor it, maybe even do some break even. You guys got to get used to using trailing stops. That helps out. But don't worry about it too much. You're going to be up a lot more. The same thing here, like 3, cross down, 5 pretty easy. So this whole loop thing here, pretty good. Didn't do nothing. Played around. Why is this not going through? But you guys get the gist of it. Went 5 pips just on something like that, and that's just off of the wick. Then add additional things to help you identify trends. Okay, there we go. We got your moving average here. Not your moving average. Oh my goodness, MACD. MACD. That's your green crossing your red. That will identify a trend change, and it's very, very precise. I mean, I was very impressed with it. So it happens a lot earlier. So this crossed over, so uptrend is about to come. And then after it did this whole spike, and as we can see, that crossed, but nothing crossed your moving average really. And then you get the first one that crosses the white moving average. So your entry should have probably been like somewhere right around here at this point. and then we can just guesstimate a range of motion. But I mean, it's just still pretty good. So entry is just really, really about being precise with your entry. And then everything else comes later. Well, technically, be precise with your risk management, but I'm helping you guys work with that. So you guys can actually understand how to use a 10-pip stop, how to use larger stops, what to the exposure. So you guys get that. That's really easy. But identifying when to get in the market, the precise, you know, entry, that's going to take some practice and skill set. As I said, binary trades, guys, this is a 5-minute chart. So you can take some, same thing, get in here, get out on the hour or, excuse me, half hour or the hour. So this candle is 115, you just pick your entry somewhere right there. You got out about 130, so you got out that candle. No, that's not it. 125 candle. 125 is right here. That's the 130. So from here to here, a call trade on binary would have been very successful. Your low arrows is going to be really good because it's going to alert you really early. Or you guys can do whatever. Just have your charts up and you hear TDD, you come in, review the markets. So understand that, what you guys want to do, what you want to be comfortable with. Sniper trades. But I mean, if you guys can see the range, and I wouldn't worry too much about planting something here, but if it adds some comfortability to it, by all means, go ahead and add your Fibonacci on a previous day so that you can see exactly, you know, what's going on. Once again, that's your buy. Expected profit. Take profit would be your first yellow here. You know, it could stop there, consolidate, or definitely right here. So projected exit. So if you guys are on like longer time frames too, let's say if you took an hour trade for whatever reason and you're using a different chart, you know, 15 minutes to go for like an hour trade, and you hit that mark on binary already, I would sell the trade more than likely. You know, especially if you can't like attend to it and stuff. But I mean, this is very, like I said, I was very impressed with these this custom Fibonacci level. So this is literally staying within a range, and you guys got like a day in advance to know what these ranges are going to kind of be like, what the market is going to do by using that. So make sure you guys got it. And let me give you the parameters once again. Give it until, I think, end of Monday, Tuesday, we can have the webinar up. Fibonacci, turquoise color. 0, 0.0, 0.25, 25. Added if you need to, 0.5, 50, 0.75, 75, 0.618, 61.8, 100.0, 1.25, 125, minus 0.25, minus 25, 1.5, 150, minus 0.5, minus 50. Into that. Might have made mine just a tad bit darker here if you guys see that. Just for sticking it up. And to see, don't have to worry about that. And that is really good. So you guys are going to have the ranges say before of just expected motion, how far a asset can actually trend up or trend down, just kind of like the average ranges and major market levels. And basically, you guys are going to use moving average, area 20, in combination to kind of gauge the distance of taking profit. If the market is going to just test it out, come back to it. So that's a really good thing that you guys have advantage to. We also have much better precise here with our MACD. If you guys can pay attention, it's like two different types of MACD that's right there. And stochastic, there's no stochastics. I'm just using the gauge here of overbought and oversold, you know, the pressure power. But realistically speaking, only thing you want to pay attention to is when your gold MACD line here is overbought and oversold, because it will eventually show that power coming up. Even coming through here, it did that, just played around, just choppy. You guys can see this, just choppy through here. Just looping, 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 in and out, just staying around that range, and that's what the market did. Consolidated right through here, shoot straight down, hit this level, then pull up, readjust, pull back to the downside. Ooh, perfect entry right here. Very perfect. Would have been perfect. Coming in, these just bounced off of this. This just crossed through. I will look to possibly get out. More than likely this level, to be honest, would have been my first entry point, which is 24 pips. I knew it's going to get around 20 to 30, then to pull back. Got to 29, pull back. Next level is 50, pull back, and then hit 75. So it actually hit 66. So it broke the 50 range, hit 66, but it always pulled back more than likely before hitting 75. And then dropped down pretty hard. 71, and I mean, that's just pretty much it. Never broke 75. So that was like really, really perfect entry there. I see this cross through, and now that's exposed. That's like really good. So I'm waiting to take the perfect entry because I see this is exposed. So I want my green to come through. This is a perfect entry because now I see that my green has looped around my average purple, and now it's crossing my red. And my MACD is already overexposed here. So this is my perfect entry. Coming in would have been, let's say, this candle point. So expectations, once again, is I know this is going to have some effect to it. So 7 pips. Next expectation is this level, 25 pips down with the perfect entry, okay? Which it went down 36 pips. So yeah, I mean, this is like really, really good. Very impressed with this, all this whole setup, like I said. Highly impressed with this. My market keys is just something else. Let me see if I can pin my keys up. No, I don't want to do 15 minutes. I don't know if I do that. But okay. Let's do 1 hour. Did that one. You guys remember which date that was? It wasn't this one. It couldn't have been this one. Okay. So this is the range here. Let me take a look and see what my keys are saying. What date is that? The 20th. Ooh. 20th. Okay. La, la, la. So my keys is basically right here, where you guys see the yellow lines here. So those are my keys. Let me see. Yeah, it's right near their same bid points, which is not too bad. Very, very similar. Really good stuff. Cool. Yeah, I would have bought at this key right here, and secondary key bought right here. So if it came down, touched my key, it would have been 10 pip stop. Dude, my 10 pip stop actually got hit. Let's see. Call trade. Then I would have reversed. Let's see, that stop that I got out, I would have waited for a re-entry, which better than right here for my original stop. Took the trade, go for about, if I do 10 up front, I'll go for about 30 just to make up for it. So I would have went right around here, 40, pretty good. I'd have looked to take my re-entry on this point, definitely, to enter off on that key. Because usually what happens is I'll take my first key, if my stop get hit, I won't even worry about these keys, and then I'll wait for it to touch my last key and take my re-entry onto that end, which is from here back out to that range. Good 86 pips. And that's just pure price action when I do that. Yeah. Yeah, my elite guys, the keys would be up soon, probably like sometime this week. I did that module a while back. Let me see. Yeah, so I did it a while back, and you guys are going to have access to that. But the order that I want you guys to learn in is number one, learn the correct way, the knowledge that I'm teaching you guys, okay? I want you guys to understand that. So go through the list. Once I could find my list, okay? So first thing is market cycle. Understand the depths of the market cycle, okay? Major market levels, number two. Number three, trading sessions, what the sessions are doing. Number four, utilize the tools that you guys actually have access to. Number five, identify your trading preference. Number six, risk and exposure. Number seven, document and learn from your mistakes. Once you guys can develop that, I mean, that's great, that's outstanding. On top of that, you guys are getting my, my market hacks, my cheat codes. I'm telling you how, in a sense, to bypass all of that stuff and to just take trades on my cheating schedules, such as oil, if you have access to oil. Three Sisters, that's a cheating schedule. Power Day, that's a cheating schedule. And I mean by cheating because it's something that is, I mean, it shouldn't technically be illegal to do, but this is trading, it's not illegal. And it's very, very profitable. It's too profitable. So for me, I consider it something that's cheating because you don't need to have market knowledge to trade stuff like that. And I don't want you guys to do that. I want you to have market knowledge overall, but to have a bonus to use certain things, okay, like those guys. Also like how I trade my ranges on news announcements and how I use news announcements to track what the market is doing. This is what my expert students are doing. So I'm just giving you guys like some golden nuggets, some bonuses, so that you guys have no excuse of why you can't generate 6 and 7 figures within the next 3 to 5 years. That's what I'm giving you guys. You can start with a $1,000 trading account, build that up in like 3 years and make like 6 figures off of it, compound it. So no excuses. And then once you guys go from that, I introduce you to eventually most of my elites are getting introduced to market keys, which is just slightly, it's just candle based and price action and everything like that. And it's more so like this, except for I can't use Fibonacci like the other woman can. Her Fibonacci is her market, kind of like her market key. So she can just use Fibonacci, you know, moving averages and just candles, and just nail this thing. For me, my market keys are like that. I can just use my keys and I know my ranges and I just take my entries and do this and that, and it's very easy compared to just other things. So that's the best part about that. So there's no limitation to what you guys can experience within a community. You should have the goals and stuff, the keys and the training to master binary, to take advantage of binary options from using reverse spreads, from using slots and getting feedback from the slots, just like you guys are getting feedback from using this Fibonacci replacement here to know what the average zones would be. And then once it breaks out of the average zones, help to check the news announcements to keep up with it. 1645, as we can see, 1700. So more than likely there was a news announcement at 10. So that's where the reversal happens. 1745. So that's probably 11. News announcements for 11. Broke through that. So just to keep an eye on that. So it's just market knowledge, guys. Just understanding what you're using, what you're looking for, what you're doing, and then, you know, just additional tools to help out on a precision entry. Okay. Yeah, but stick with assets that range that you can trade. So these are really good to stick with. This one. So let's see. And even if, so I did this whole trap thing now. So drop down, then come up, double top, but to be honest, I don't care about double tops or anything like that. This is still trending up solid. Let's just take a look at the trend, but I can pull it down. And look what that did. So 5 minutes, it bounced off of each one here, came up, touched this area. Oh, that is overbought. Overbought MACD. So it looks like it's probably going to bounce back up and then come down. I'm definitely paying attention to what this is doing. Also, according to this, it's still an uptrend. So as you guys can see, it's just, that's just what it did. It pulled back down to here. So this is technically still a uptrend because of the moving average, especially the white moving average. Once your red candle cross below the white moving average, then that signifies possible trend change. But you want a precise trend change, so you use the full solution here. Wait for your green to cross your red. This is above them, so that's really good. When that starts to drop, you already had a successful entry. More than likely, this will eventually cross your yellow too with the red candle. And potential, anywhere from these price ranges, okay, of entries. You just got to get the clear indication of when to enter, all the way down to here. So that's the first area. The 13 pips right now. Could drop down to match up with this spike, so 20 pips. Or it's going to break through here. That's just how it is. Yeah. The possible to break through this last level. And once again, once you have new zones to pay attention to, you keep up with news announcements. What's going on? So let's see. So that's just that. 24th, 25th, 4 a.m. news announcement is going to identify what's going to happen about that trend after it reaches this point, okay? And then you just keep up with it and go from there. The other indicators, Pimp My EA. Look that up. Nothing too much. I would leave these open if you guys can. Like, don't close your MT4. I don't know. Sometimes you may miss the ADX crossing, but I doubt it. More than likely, you miss these ranges here. Something else some of my students have been doing is editing these alert hours that I got to see. So they changed the value from like 3 to like 5, the signal gap. So I'm not too sure what that is, but I've been seeing them talk about that. So you guys may want to do that or may not at your own discretion. Alpha 3 is really good for identifying like trends and all that stuff, but I would not worry too much about that. Just use the reverse ADX crossing. Take some binary trades. It's basically like scalping on binary. So boom, here's one. Has to get filled up. You would have took an entry there, got out. 5 minutes later, here's another one going down. You would have took a sell trade as soon as that closed. 1 to 3 candles just exploded up, so it counts back. You can't count that as one candle, but you would hold it, get in that position here as soon as that closed out, and boom, that have been a successful trade. Let's see. There's another one. Successful right next door to it. Another one. Got in there, lost that first trade, took the second trade, won it. There's another one came out, you got in there, got out there, won that. Pretty good. Let's see, I got some more right here. So got in here, won that, got in here. This one canceled out, so then we got 1, 2, it closed on the third candle. So you guys would keep in mind of using that your slot. So you got in here, slot 2, slot 3, slot 4, okay, in order to win that successfully on a 5-minute time frame right there. Just taking 5-minute trades. Yeah. Now what increase that is just, once again, staying within a proper time, not doing it on bank holidays, because bank holidays, your slots are going to range a little bit more. And also trading rules. If you hit a slot 4, you got access to 6 slots, and you land on slot 4, take a break. Don't continue to trade, because more than likely, it's always opportunity. You'll land on slot 4 probably like twice or go passive before you guys like dip into that. Yeah, so that's for that. Okay, gaps. I don't trade gaps. It's not worth it to me, to be honest. Like, once you guys get to a certain point, you're going to be able to just decide what you want to do. And I'll go back to that really quick. In order to probably see gaps, and gaps happen most after weekends. You got to take the Heikin-Ashi candle off to see gaps and use Alpha 3. Okay? So Heikin-Ashi candle is off. Let's see. Zero CAD. I don't know if that is gap worthy. How many gaps that thing does. Here's the gap. So market close, and that's the 15th. That should be a Friday. Got it. See? 15th Friday. Market close pretty much right here. And then when it reopened Sunday, it's way up here. Okay? So between this time orders got filled and all this stuff. And to be honest, I used to try to place my order based on what I saw here. So like the day before, like Friday, literally, I mean, this is probably like 4:45 New York time or whatever, something like that, 4:45. I'll take a look and see what it is doing. I'm like, oh, exposed double bottom momentum here. And I'll place some sell contracts, and then it closed in 15 minutes. So excuse me, buy contracts, then it closed in 15 minutes. So I'm locked in. Then all of a sudden, when it reopens, you know, I'm up like all this pit because I ordered my contracts here and all that stuff. So, you know, I tried to do that, but I couldn't keep up with it enough to actively produce a solid duplicatable trading schedule. So like some days I'll do it, some days I wait. And also it happens so often. I mean, this is what, January 15th. To be honest, I think it's about 3 gaps within a month, or like 1 gap every 3 months. Let's see. So January 15th was the last one. So that's what I remember my range is. But if you're taking a look at different assets, that'd be really good. So if you guys can find like a indicator that can give you a gap alert, then that would be awesome. So December the 11th was the last one. That's the only thing about gaps. So I really can't keep up with it too much. And that wasn't even that much for that. And as you can see, once again, this whole thing closed at that price. And then opens right here. So that's like a 30, basically a 30 pip difference. And usually what people are doing, there's about roughly around a 70% chance that gaps will get filled. So as you can see here, market opened up here. The market pulled back up to close that gap, okay? Normally, I would probably go with the body here or the wick. It just depends your risk preference. So once that opens up, it comes back up, touch that wick. So it closed this space in regards to that, and then continues to trend back. Let's take a look at January 15th and see. So that's opportunity for some traders. They enjoy it. For me, it always worked in my favor using my market keys, to be honest. It just worked in my favor. Okay. So I'll take probably this part. I'll look to get out from there. Let's say I just came to the market and like, oh, okay, so that gap has to get closed. Let me take my entry, boom, right here. My exit is right here, boom. So that's how I used to take it and trade gaps, and it's about 70, 75% like this accurate. In some cases, you have to do it like this, as soon as you can get the next wick point right here. And this is the reason why it did this. But sometimes it's going to bounce off of like the next wick point, which is not, because this is like the lowest of the body, and then I'll come in and I'll be like, well, what's the next area of interest? Oh, right here, definitely, because I see that these wicks is laid out through here, just me reading candles. But sometimes it'll do this, and then just take off and continue to uptrend, you know, so it will not come down and meet this level. So, you know, sometimes I used to just have it just meet like my minimum profit that I'm looking, but it just kind of depends on where I was getting in at. So if I take from this point to here, 24 pips, and then maybe I'll use a trailing stop, you know, and then go down to my second point. But for you guys, it'd be a lot easier to identify by using this. And we can see that even if you decided to take an entry based on here or here in this price, area of exit right here at the Fibonacci point. Okay, so that's why I keep telling you guys this Fibonacci right here, this custom retracement is very impressive. So I used to do it on a just me knowing my ranges and on candles, but I've had enough experience to know where the candles are and all this stuff, and which is good. But now you guys have a manual process, automated process that'll plan out your ranges. So that's the thing about gaps. But just keep it Very, very simple, very precise of what you're trying to target, okay? That is it. And keep the trades. Let's see. Everything else is just like really trying to just help educate you. And I mean, you guys see how many templates I got? It is insane. All these templates that I actually have on here, a whole bunch of, I think last time I checked, I don't know, templates and indicators. Once I started trading, learning Forex, okay, I did not understand this candle stuff. It's too complicated for me. So I went with binary. I mastered binary before I can get away with taking trades. Indicators, I know I got about 315 indicators. I know that. I test different indicators, different templates, mainly to get market knowledge from it. That's all I want to care about. I mean, that's just really it. That to get the knowledge behind it was why, you know, this is a good buy entry. Why does the market or this indicator tool decide that this is a very good time to take a buy trade here? So what I do is I'll pull out the price, all they come out, and just focus on that and focus on these parameters, on where the major market levels were, support and resistance, pivot points. And then through trapping, one day I just got really frustrated with so much trapping in the market. It was like really choppy like this, just going back and forth. When it happened to me, I reviewed my stuff and I've discovered the market keys. And since then I've just been using that. Let's see. So that's what you guys want to do, is just to get something to where you understand the manual process for it, and then you can get something to automate it for you. And I mean, just reviewing just the next best templates, and I've got them pretty much all the top templates. I got retailers that sell me the top templates and top trading courses of everybody, okay? I kid you not, I got retailers that sell me this stuff at a very wholesale price. So I review what is deemed worthy and what can get PMA community the best results, what's worth the time of looking into. But you guys are going to be set up pretty good. Just stick with the principles. The trading checklist, you guys can use that still just to kind of check off everything. But in regards to a custom checklist, I would probably check off the 6 things that we covered tonight. All right, let's see. Okay, so let's learn up some assets really quick and just keep an eye up on it. And just here with you guys really quick, showing you how to successfully use your tools. Okay. Okay. This is going to cross down. Once it crosses down, it's probably going to loop back up and go above the 50 because your MACD here is low. So it's going to, MACD is going to come up and more than likely bounce off of here. So pay attention to where this range is going to be at. You know, that's something to really pay attention to, or it's going to break through here. If this thing comes down, range, I don't think, it's just probably the pullback. I don't think it's a trend. I really don't. Let's see. But that's a really good buy signal. Well, somewhat good because pullback is here, as you can see. So cross the white moving average, trend up, pull back to the downside, cross the yellow, pull back to the Fibonacci point. Now it's turning up. Potential profit, 59 pips. 59 pips is currently 10 to 17. Next news announcement come out, I believe 4, so let's take a look. 1 hour, 11, 12, 1, 2, 3, 4. That's 6 hours. If you have 15-minute candles, 4 candles equal 1 hour. So then you do 6 times 4, which means you got right around 24 candles until that news announcement come out. So this is something more precise. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20, boom, boom, boom. But even still, we know that announcement comes out 4, so we can just mark it on the chart because you are expecting that. Let me double check. My 4, yep, boom. That's when an announcement comes out right here. So once that announcement comes out right here, we need to do a market check based on those ranges, okay? So we don't know where it's going to be at. It's either going to be up here, it's either going to be higher, it's going to be below. But we know right now as far as this entry point, that's pretty good. And if I wanted to, I can base my normal range based on my moving average. So 20 pips, then a pullback. You touch 21 pips, and then pull back. Next range is 30, probably 50. So I can mark it right here, 50. Let me double check. And this is just me using market knowledge. More knowledge you guys have. So let me eyeball that really quick. Okay. So 50 is right here. So got everything set up. This thing, if it has the volume to like really explode, it's going to come up and touch this price point. I do not believe it's going to do that. If it just continues to move just like it's doing right now, the highest it's going to go is probably right here. Then it's going to retrace back down for a pullback or a trend change. So that's my preferred exit point. And this is based on my moving average. What I know, I see 20 to 30, it does a pullback. It hit 20. Really good. Next range of pullback is right around 50. And then it has to break the 75. So it's going to pull back right around 75. Possible pullback, and then go for 100. The 100 pip mark. But just simply just looking at this without even using it, I mean, that's a really good entry because, once again, it crossed that yellow moving average. We know that. And technically, we got it right here. So, boom, it crossed up, so uptrend. So it told you the entry right here, uptrend. And I showed you guys that your MACD is down below here. Okay, it's below this. That means there's a ton of power behind it. Okay? But this is also on your pivot line here. So it's probably going to do this whole thing. So this will go through it like this. And then range up. So anything that's coming back down to me is the pullback. That's what it is. It's not a trend change or anything like that. I'll definitely need to check it when that news announcements. Okay, where is the current trend going on? But that's basically all it is to me. Because right now it's just about getting a perfect entry. The next perfect entry. So the original one was right here, so the market drops back down to that point. You can take the entry price based on your original entry from the first one, okay? I've done that before. Or you can wait until you get the next entry, this turnaround. But like I said, I'm expecting this to come down, break through, and then come back up. Probably like right around here. If they hit that, touch that. Yeah, double top. That is correct. So Kurt said possible double top, which is good. You guys can use that. But I've noticed that a lot of times they're going to fake it out anyhow. So they do have fake double tops. So I stop depending on double tops and like double bottoms and stuff. I really wouldn't. I've gone into like a 3-loop. That's how much fake double tops I've experienced. So I was like, oh, let me do my 3-loop fake out. That's where that comes from. 3-loop fake out with the stochastics. See a smaller time frame, 5 minutes. Okay, all right. Let's see, 5 minutes. Ooh, that's going to cross back up. See, 5 minutes, you get a little bit more data coming from it. There's a software you guys can use, MultiChart. I don't have it on this computer, but it's. Let me look it up on my other page here. I do believe MultiChart. No, that's not it. Multi. It's something weird. MultiFlu. Yeah, I gotta get it back. I got so much stuff. Okay, Multi. Yeah, when I find it, I'll probably show you guys on it. But it's a split screen. Let me see if my other computer is on behind me. Okay. Yeah. So that way you guys can actually, if you got like multiple screens, which I highly recommend having multiple screens, at least 2. I probably wouldn't go past 3. To be honest, anything past that is just like you're just really being extra or you're monitoring too many assets. I mean, you can have one chart like this, identify one asset, and to be honest, another chart, where's it at? Correlation, right here. And then see what's in correspondence with that asset that you just did market analysis for. And then have the, what is it called? Your other chart is your actual broker. That's it. So, I mean, you don't have to get fancy 6, 10, 8 charts to where it's all different things you want to look at and all that stuff. That's just to look good and feel like a trader, to be honest. I've had, 6 screens set up before, which I still got my screens, but I don't turn them all on because I noticed I wasn't using them all. And then I was like, oh man, I'm going to get like a 10 screen setup just to have, but to be honest, 3 is like more than enough, and it's great. It's really good just to have multiple screens. Right now I only got 2 hooked up. I don't want it to pull too much on my webinar. So, but yeah, like I have 1. I trade my futures, okay? So my futures broker is on my screen to the right. I have my screen to probably to the left is actually my chart, and then my other screen is just me just on internet. That's it. You know, I do some stuff like I'll be on YouTube, just like listening to different things. Like I'm a knowledge junkie. So I spend on average about 6 hours a day learning new stuff. Just different things with technology and everything like that, or whatever. Let me show you guys something really cool. Matter of fact, that I just purchased earlier because I saw it. If you guys haven't noticed, I'm about a complete life. Okay. Yeah, I'm about a complete lifestyle. I am not just about trading and just about making money. I'm about health, wealth, you know, especially, but really just providing for your family, leaving a legacy, and just living the life that you deserve. and you live this life by, let me see, where is it at here? I got 2 million messages. Okay. Oh. I just got this technology piece. Okay, that's the website called. Real big on like meditation and all that stuff, and I will tell you guys. So, okay. Hopefully that moves over. All right, so I got this like this morning. Oh my goodness! So I seen this on one of my students sent me this. They're like, hey, check this out. So I just decided, I'm like, oh well, let me go ahead and get it. So I'll be here this week, and it's like this really, really cool stuff. So this is what I'm about. You know, I'm about just advancing forward and just health. And this is work with your frequencies, your neural system of the brain. So they use a device that sends signals and just work with that. So it's technology. I'm a tech guy. But I'm also very, very connected with my very own body. You know, so I can tell if I if this would benefit me personally or if it's doing harm to my body. Like I'm hypersensitive to things, even metal. Like I got like just gold watches. I can literally feel the metals. It's like the minerals on my skin or something. So my body's hypersensitive to the frequency and everything. So because I went like detox, organic, and everything. So anything that's out of balance with like your lifestyle, and it's like just raw and natural, the smallest thing is going to send a signal to you. Yeah, it's kind of like when you guys have like shoulder pains or something, you got a bruise, and your body's telling you, you know, hey, check this out. But later on, when you get like all into this health stuff, you're gonna notice different stuff. So that's what I'm about. Just living that whole lifestyle there. Okay, so I no longer need this. And once again, you guys don't need that indicator here. I just wanted to use the visual aspect of it, of how the market is actually trending. But I truly don't use that. When I first got it, I was like, oh my goodness, it's so cool, so awesome. And then I noticed that, oh, I was taking my trades on pullbacks, but I didn't think I was taking it on pullbacks, and that consciously showed me that, hey, I've always taken my entries on pullbacks. I'm like, how cool is that? What did I tell you guys? So it's going to cross back up. Let's watch, see what it's going to do. This is going to break higher. This is that fake out. Usually what it does is this. It acts as if it's a double top, get people to come back in, and then shoots up and breaks above this level. Usually past this. I wouldn't be surprised if this shoots up like this, and then it's going to continue to trend. But I want some confirmation with this here. So exposed, very good. Got the sell entry right here. But once again, it really didn't cross. Red candle did not cross the white moving average. So I need for that to happen. So I got it, but it's not in correspondence with that. It just bounced off of it. So this has to show me a little bit more. You guys see that? So I'm not going to take a sell trade. I need the market to do certain things in order for me to take a sell trade. So this crosses over, then that signifies a buy. But once again, this is up high, so it could pull up more than likely to this range, and then it's going to come back down. I don't think it has the potential to shoot all the way up to here. And I can really mathematically equate that. So my ranges on a successful entry, so 20 would be the pullback right around here. Shoot back up to 50. And then pull back, so it does have potential to come through there. But before that happens, I'll have the announcement that I can use to give the direction. Okay, let's see, USD. And I mean, realistically speaking, we don't have to go through every single asset here because you would have that correspondence. Take a look at that one as well. Oh, what was that? Alpha 33, I mean, you guys can do that too. Well, this is just slightly more precise with it. All right, so let's just set up some fibs. Not accurate right here. Much more accurate. Come on. I'm trying to lock it in. There we go. Locked it in. Put it on 15. 5, excuse me. Oh, that has crossed through here to signify a sell trade. This is a sell trade. This is a sell trade. So we got this, once again, white moving average is on top, that cross, excuse me, yellow's on top. This pulled down, potential, right here, 18 pips, pretty easy. But this came through here. But told you to sell. That's what it first originally crossed at, but then you had the pullback, okay? And then you have the re-entry, which is this price, because that's where, see, nope, it's telling you right here to sell. But those candles are still green. There's the pullback coming from there. But if you guys do get like a successful trend, Euro CAD, use the other feature. That indicator too, correlation indicator. I think it was like $10 or something, 10, 20 bucks. And where'd it go? I think EuroCAD. So Audi CAD, 90% matching the trend right now. Same direction, 90%. Audi Swiss francs, 90% total opposite. CAD JPY, 97% complete opposite. 94% Euro GBP. So we got, just off of that analysis that you've seen, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 highly corresponding assets, okay? And you just reviewed 1, and there's 13 that are either highly exactly like it or it's a mirror reflection to it. So you guys can really leverage something like this. I think before what I was having you guys is kind of doing like the manual process of explaining it to you, of what to look for and everything like that. But like I said, there's some tools that you guys can use that will make your trading really good. Simplify it. USD. That's this. This is something called a sessions indicator, but I mean, for the most part, to be honest, you guys are using the retracement levels and all that. I mean, it's no big improvement to understand the cycles on sessions. But at one point, it's really good to just have the knowledge, kind of what to expect. For some people, having that knowledge would make them more money and keep it. But some people, I mean, it will not. But it's just something just kind of just understand to learn. To close that out. Oh, that is there, but I already got that. See, alpha 33. That's pretty much the same format. I mean, it's very, very same. Okay. Here are the momentum is what we're really paying attention to, which is this orange line here. Momentum crossing through your MACD, which is your golden line. So that gave a clear signal to take an entry right here because it did cross through. But we do know that this is overexposed as well. I would have waited to get it come through here, which is crossing the light moving average area of expertise. A word to get out would be first, yellow moving average. Second, this parameter with the Fibonacci point. That's my first, just on things that you can see. Realistically speaking, it's still like up pretty high. You guys have access to both of it and see which one you prefer. I would definitely work with 007, like 1 and 2. Okay, so I mean that's pretty much it, guys. There's like nothing really else. You guys can just watch the market and the placements and everything, and just mark it up and see exactly what's going on. Let's see. I have something else. Nope, that's everything. Goal set, just to keep it really simple. Try to do 5 picks per session, okay? I mean, that's just it, or whatever, 5 picks, just you want to keep it to where it is very consistent. I don't want you guys getting used to trying to get 100 picks a day, and to be honest, I always, I guess, talk about hit 100 pips days and everything like that, and you guys feel as though you have to get 100 pips. No, I'm at the point to where I won't get 100 pips. Like, this is intraday trading you guys are doing right now. You're not holding it for a couple of days. If you're going to hold it for a couple of days, then yeah, 100 pips would be really good. But most of the time, it's not going to range 100 pips unless you're really monitoring it, okay? And you do that by using the retracement levels and using the news as marker points. Then you can see if you can hit 100 pips, okay? If it's, the potential is there. But besides that, go for the least amount that you can expect. I think, to be honest, 20 pips per day is really good, but if you guys, that's too much pressure, you want to start off as a scalper, do 5 pips. That's really easy to where you can get in and 5 pips per day, 5 pips per session. That's like 20 pips technically per month, 20 pips per week, 80 pips per month, definitely. If you use a trailing stop, 100 pips per month. Depending on who your broker is, that can be 100% gain for your account, okay? Depending on what you're doing, 100% gain. Most of the time, most brokers margin level, 250 pips in a month is right around 100% gain, okay? But keep around 30% gain, and you guys are going to hit 6 figures and 7 figures right around 1 to 3 years, depending on your account balance. Start off with $1,000, 30% gain a month compounded, 6 figures by the time 3 years come. Compounded another, 1 year, the same thing, 7 figures, 4 years. $1,000 to, 7 figures in like 4 years, okay? From doing 30% gain. So if you guys start off a little bit more, $10,000, 30%, about 2 years, 6 figures. Third year, 7 figures, okay? So it doesn't take a lot to really to just get this whole trading stuff and get consistent results. It really doesn't. You guys just have to be on point with everything. You have to be able to understand it and comprehend it. If you guys don't understand it, let us know. We'll do something to make sure you guys get it. But once you guys understand it, you're just going to get some really great results, okay? And then on top of that, like I said, we got so many different market hats and cheat codes and everything like that that you guys can use to leverage, but you still have to control risk management and exposure in order to get that, all right? Got it. So give it a couple days, everything will be up. Once the webinar is up, once again, you guys can go back into the Alpha system, re-download the Alpha system, and transfer the files back over. You should have the correct templates and everything. You need to have that Fibonacci retracement on what that is, set that up, okay, manually. Let's see, if you don't have your mediator line or your pivot point line, add it there and begin to monitor that and watch that. So yeah, I'll get back with you guys in regards to the group mastermind and everything like that. All right. So wish you guys much success and of course happy trading. See you on our next session. Take care.